Welcome to Stock Odds. This is the Odds and Ends podcast with Rob Friesen and Dave Singh. Our purpose is to introduce more traders to using stock odds, its data, tools, and in order to increase the odds of their trading success. Today, we want to drill down into the Sector-ETFs. This is part of our weekly preparation and Sunday night preparation for the next day and the week ahead. And we wanted to share kind of our insights with you as to what we're looking at. Sector Spiders and Sector ETFs, these are broad ETFs that represent either like the S&P 500, we've got Spider, but there's also ones that represent each sector and they're on a weighted basis. So we got, they're titled with XL, XLE, XLC, XLE. So we've got materials, energy, financials. We're gonna go through all those. So in today's podcast, we're gonna focus in on these ETFs. Where did they come from in the past week? What do the stats suggest going forward? And how to generate actionable ideas for the trading week ahead. But before we drill down into the ETFs, I wanted to take a quick look at some of the indicators and signals that affect tomorrow's trading. Last week, the dollar was very strong. We hit a 9.5 month high. The 10-year yield's about 1.25, 1.26, still around a 6-month low. Oil had a horrible week. We're down from July's $75 range down to the $62 range. And there's still uncertainty around the Delta variant, Afghanistan, and we're coming up to the end of the month. And in previous talks, Rob's talked about the last 5 days of August being statistically strong, and there's that end of the month seasonality. So we want to go over all that. So Rob, how do the odds line up for the week coming ahead, and particularly around these sector ETFs?
Well, first, I think the big granddaddy of all the spiders, the other sector spiders, kind of all are components within the S&P 500. So the granddaddy is up 1.1% so far for the month after having dropped into the negative range there on the previous Wednesday and Thursday, and decided to people came in and bought the dip there, and we rallied up on Thursday off the lows, and again on Friday to close up for the month 1.1% on the SPY. Now that exceeds the seasonality expectation for August. We were supposed to finish at 0.7% up for the month, so we've exceeded that. What that helps me consider is if the last 5 days of the month are where the performance would normally mostly come from in August, then either we're going to add to this or we're going to have some event that changes that outcome, meaning that we pull back and we don't have such a strong seasonality. We could kind of dip from where we are. Like we just rallied for 2 days. And we could pull back from here. We're kind of on the fence as far as the odds. So the odds for open to close on the diamonds, spiders, Qs, and IWM are all kind of, just under 50 there, a little bit questionable. Diamonds are the strongest for tomorrow's open to close trading performance. So we'll have to see if this is true, that we kind of sputter here a little bit and maybe we don't continue the rally as we just saw over the last 2 days. We may have a little bit of a pullback, or if we do, continue to climb, we're going to be up into the top Bollinger Band, pretty much where we came from, and possibly again the market making new highs before we finish August. So, just put a little bit of caution over the next 2 days, according to the seasonality. And then if we see kind of a robust follow through on Wednesday, Thursday, remember there's the Jackson Hole Symposium, which is about monetary policy. That's this week. It was going to be in Wyoming, but it's talked about being moved online. So people are going to be listening for any direction about the taper, anything about monetary policy that could help, judge whether we've got some wind at our backs in this, monetary policy. So that'll be interesting, and also possibly about the Delta variant impact on the forecasts and what the Fed's been doing here. So stay tuned for the comments out of the Jackson Hole. Anyway, let's run through some of these sectors here. So I'll call out one, and I'll kind of talk about the odds. You tell me what you see from seasonality.
Sure.
So what I did is I curated for the RSI as a signal, and I curated for the %B, which is basically standard deviation or proximity to +2 or -2 standard deviations. I curated odds for that. And just in terms of last performance, so based on what happened most recently. And I'll start with XLB, which is basic materials. And I have odds a little bit stronger from the RSI side. It's at a 39 RSI, which is in that 30 to 70 sweet spot. And it has some room for follow through. So the odds are favorable there. The odds are still over 50, but less so on the %B and the performance. What do you have for XLB?
Yeah, the spider's expected to be up 1.25%, but the XLB is expected to be up 1.02%. So slightly less than the spider's performance for those last 5 trading days of the month.
Okay, well, that's the last 5 trading days, right? Okay. So what I've got it dialed into is for the next 5 days, of which your time frame starts on the Wednesday, is the first of the 5 days. Okay. So I'm covering 5 days from the close of Friday, right, to 5 days later's close, and you're covering from Wednesday through the end of the month, right?
Correct.
So this could give good perspective. So would you, when you look at your numbers based on odds and average performance, would you give it a green light?
I'd say it's about equal to the spider. I mean, so it's not
okay. Because I'm gonna pull it back a little bit. Like I said, I'm gonna pull it back. The %B and the performance don't indicate incredible performance, and neither really does the RSI, either the odds are high. So performance is relatively low in the next 5-day window from XLB. And then if you stack yours on that.
And here's something interesting. For the last 3 trading days of the month, the XLB and spider are about the same performance. So
okay, and the last 3 days starts on Friday.
Uh-huh.
Okay. All right. So moving on. So we're going to kind of say I'm not super excited about XLB, basic materials. Doesn't mean I'm going hog wild on gold stocks or any things like that. So let's move into XLC, which Facebook and Google really dominate in terms of weighting. So really, it's about what the FANGs are doing, and I have really robust odds. 63.9 for RSI, 75 for %B, and 55.4 for just move performance. And the outcome, the average performance expectancy, is reasonable across the board, with the exception of performance. It's slightly negative, so that's the questionable one there. What do you see on XLC?
Well, of the 10 sector ETFs, this one has the greatest outperformance relative to the spider. It's expected to do 1.92% relative to the 1.25 of the spider for the last 5 trading days.
So we'll give it a little bit of vote of confidence here for the next 5 days, and then the overlap of Wednesday, Thursday, Friday is part of the 5 days that Dave's talking about, the seasonality. So we're giving it a vote of confidence on a statistical basis. Okay. That means that these ones that were out of favor for the previous 6 days that sort of turned the corner on Thursday and Friday, Facebook and some of the others, may see some sustained tailwinds going into next week, right?
One more note. For XLC, the last 3 trading days is expected to have negative performance. So it's like strong for the first 2 days of it, but in the last 3 days, it's minus 0.27%. So maybe big bang in the first couple of days.
I'm gonna throw in a commercial break here. We want to start doing this in September when things get back to more, participation. Like a lot of people are away and taking their holidays and stuff. So once you get past Labor Day, things get back to more business as usual. We want to be more granular, which means, sort of do our homework for the next day like this on a regular basis. So we look forward to you guys joining us when we do that. For the rest of this month, we'll probably hit next Sunday as well, and maybe the following one, and that's it. Okay. XLE. Now we've arrived. I've had a lot of comments on this particular sector for a number of months preparing for weakness, and we certainly have seen that. Now, when I look at my odds for the next 5 days, I've got 45.4, so we're under 50 for RSI, under 50 at 48.5 for the percent B, and we're pretty close to 50, just a little bit over on the performance move, but there's no average performance to speak of. It's benign. So what this is saying is that energy is I'm going to still keep a thumbs down on it, meaning that there's obvious macro stuff going on with it. Plus, the performance here clearly says I'm not too excited about it. What do you see on yours?
Yeah, for the seasonality almanac, for the last 5 trading days, they're almost about the same. 1.19 for the XLE and 1.25% for the Spider. And then for the last 3 trading days, it actually outperforms the Spider, 1.35% for the XLE versus the Spider. So robust last 3 days.
So the last 3 days starts on Friday. So let's keep it on we're not too excited about it for this week. And then we'll change our tune maybe for Friday, Monday, and Tuesday. Okay?
All right.
XLF, I've got 53 odds on the RSI with good, healthy performance, 56 on the percent B with reasonable performance, lots of events there. And on a performance basis only, 49.7 and negative 0.22. So out of the 3, 2 of them are aligned and one of them is kind of disagreeing. So I'll still give it a vote of confidence. It all depends on TLT, and I think TLT was indicating kind of softer performance for the next few days, but anything could happen, change, especially with the Jackson Hole thing. So we'll have to give financials a kind of clear passage with a cautionary regarding monetary policy. Okay.
Yeah, and for the last 5 trading days, it underperforms the Spider, 0.96% relative to the 1.25 for the Spider. So it's a little weak there. But the last 3 trading days of the month, they're about the same. So it seems like the weakness would come earlier in that 5-day window.
Okay, well, here's an interesting one for me. XLI, based on the backdrop with the infrastructure package and all this kind of, all the discussions and things like that. And what I've seen a bit of flight to quality, strength in the US dollar, strength in domestic stocks to some degree, and a little bit more defensive. And some of the industrials have been picked up. So this is interesting because I've got 67.1 for odds from RSI, 67.3 odds from percent B, and 54.1 on sheer price performance move, and robust average performances across the board. So XLI gets a thumbs up.
And from the almanac perspective, it's actually slightly underperforming the Spider, 0.78% relative to 1.25 for those last 5 days. So it's still up.
And what about the 3 days? Let's see how that changes.
3 days, it's like 3 days is also underperforming the Spider.
Okay.
0.66 relative to the 0.73.
Okay. So then if we're going to have industrials perform, they need to perform in the next few days. So I'll keep them in my list of stocks to trade for tomorrow for sure. Probably again for Tuesday. I may back off on them later in the week. Okay.
All right.
Xlk Technologies. Well, we got 56.9 on RSI, Only 50 on percent B, and the thing with percent B, it has negative performance expected. So it's really on the fence with arguing a bit with the RSI. On a price performance basis, it's not bad. 64.6 with 0.90 performance. So 2 out of the 3 agree. What do you see on yours?
This is like XLC. This is probably the strongest one in the group.
Okay.
It's outperforming the Spider 1.87.
Well, that makes sense. You look at the components of XLC are also technology stocks that are huge market caps, right?
Yeah.
So there you go. Those two should be aligned.
Correct.
Well, that right there shows some correlation between XLK and XLC. You don't always find that. Like for example, XLE is certainly not as correlated with, financials, as XLK and XLC would be, right?
Correct.
So it's interesting. Apple's a big part of XLK too, but Apple doesn't always march with the beat of the other drummers, right?
Yeah.
It marches to its own beat. Okay, XLP. 55.4 on RSI, 65.2 on percent B, 54.8 on just price performance move. All good average performances. What are you seeing on XLP?
Yeah, it's up, but still underperforming the Spider, 0.47% relative to 1.25. So.
Well, and it should, theoretically, consumer staples should sort of underperform the SPY when the SPY is so highly tech weighted, right? I mean, five or six stocks make up 22% of the SPY, and they're all tech stocks, right?
Yeah.
So you should have a little bit of underperformance from XLP, in my opinion. XLRE, Real Estate Sector Spider. This is interesting because, again, it's a bit financial related, could be related to TLT in terms of inverse moves. 64.5 for RSI, only on the fence at 50 for percent B, and with a performance move 57.4. So 2 of the 3 agree, and the performance from the percent B would be pretty benign anyway. So I'll give it a vote of confidence here. I'm going to put it in the same category as the financials with a bit of cautionary overtone, right?
Good. And for the last three trading days of the month,
right,
it's on par with the Spider. But if you look at the 5-day perspective, 5 trading days, it's underperforming the Spider, 0.87 relative to 1.25. So it seems like the first 2 days of that window are going to be weaker for XLRE.
Let's move on to XLU, the utilities. I've had a good week of those. They've been performing really well, actually, over the last 2 weeks. And especially when the market was heading down, they were heading up. So it was quite nice to enjoy that ride there. XLU 51.5 on the RSI, 48.9, so under 50 with negative performance on the percent B, and we've also 54.3 on the move itself. So I'm not too excited about this group for this coming week. What do you see?
It's pretty down, so minus 0.34% performance relative to positive 1.25 on the Spider. So big underperformance relative to the market.
Okay. And XLV Healthcare, we've got 60 for RSI, 59.8 for percent B, and 56.6 for price move. This is one of those ones that I've got a lot of healthcare stocks in my list for tomorrow. I'm doing long basket, about 120 symbols long. I'm doing a short basket with about 30 symbols short, and the rest will be ETFs. So I was thinking of having some XLV standing by to cover the risk side of being in so many healthcare stocks. One of the reasons I'm okay with that kind of weighting in that is I'm expecting the FDA to come through for Pfizer and Moderna. on the approval. And if that's the case, it's going to kind of buoy, potentially some of these other stocks that are in the group as well, which then all move the XLV favorably. So I'm going to leave it with a thumbs up on XLV. What do you see?
It's about the same performance as the Spider, so it's 1.23 versus 1.25, so about on par with the market. So neither up or down.
Okay, but I mean it's showing okay. All right, so it's looking strong out of the gate for the next 5 days here, and I'll just stick with that. Last one, and then we'll close with that. XLY. I see 66 odds for performance of 0.22. 58 odds on the %B, but the performance is negative, so that's kind of questionable. There's only been 50 samples, so we must have had some really bad samples in that lot. And then performance 59.7 for 0.2457 performance. So overall, 2 out of the 3 agree, and it's not too bad. We've got some tech stocks in the consumer discretionary. We've got some domestic stocks. If the dollar stays strong, some of those domestics do well. And so I'm going to give it, an okay pass. I'm going to put it in the category of the technology and the communications and the XLI and say that it could perform okay. So.
Yeah, I see it's about the same performance as a Spider, just slightly less. So
okay.
Nothing dramatic.
Okay. All right. Well, appreciate you working on this with me. I've made some notes here while you're talking on that too. So I think we're prepared for tomorrow, having done our screens and getting our ducks in a row. So anyway, thanks for listening, everyone, and catch you here next week.
Thanks, Rob.